Yeah. Thoughts on IULs? I don't really like them. I think they're great for the insurance agents, right? Because they get a massive commission off of it. I think insurance agents love it. I don't think the vast majority of people need IULs. I think, don't get me wrong, I think there's some people who can benefit off of that. Permanent life insurance as a whole, I think 99% of people don't need them, right? Is putting a house in an LLC ever a good idea? Your primary residence? No. Rental property? Yes. Do you recommend PAMs, PAMs? Remind me what a PAM stands for. Jordan, thank you so much, man. I can answer pretty much everything else except for student loans. I know that there's only a specific amount of interest that you can deduct. And if you have high interest rates on student loans, you consolidate. That's my expertise in student loans. Greg says, pledged asset mortgage. It depends on the situation, Greg. I don't think it's bad product. It just depends on what you're trying to accomplish, right? I have a lot of clients that have like S blocks, right? Securities backed line of credit, right? If they take a loan against their securities at a low rate, they can, buy something else with a higher rate. That's the general idea, but not always good. Is there any event that would make that pension payout taxable, Aaron says? No, it shouldn't. With pensions, here's the thing. For those that have a pension or will have a pension or are just generally curious, a pension typically gives you two options. What are the two options that pensions give you? One, we can either annuitize it, so the pension or the employer is paying that out to you. Or what's the second option? You can roll it over, right? So it's either, hey, we can annuitize it, you get the cash till you die, 50% survivorship, whatever the case may be. Or, you know what, just roll it over and you self-manage. So you kind of have to figure out what's the best outcome for you. But no, it shouldn't be a tax consequence, right? There shouldn't be any. Exhausted all cost segregation and zero basis. What other tax incentives? Buy more property, Tommy, right? You have zero basis, exhausted cost segs. Can you refinance and buy more? Can you 1031? 1031 is not going to do anything for you, but yeah, buy more property. Annuities are a scam most of the time. Man, not all of the time. I don't think they're a scam. I think it's a tool like anything else. An annuity is a tool. Life insurance is a tool. Whole life is a tool. It depends who needs those tools more than anybody else. My philosophy is that whole life policy is a specific type of tool that benefits the 1% the most. Everyone else probably shouldn't have it. That's my opinion. What's the point of an annuity? Well, there's a different type of annuities. When you invest your money in an insurance company or an annuity company, you're going to go into a contract with this annuity company. You're saying, hey, annuity company, what are the big life insurance companies? Lincoln, I don't know, Mass Mutual, whatever. You're going to entrust all of your hard-worked money and you're going to give it to the insurance company. And the insurance company is going to go into a contract with you and they're going to guarantee you something. They're going to guarantee you 5, 6, 7%. There's all these riders and caps and whatever. They're going to take that money and they're going to reinvest it and they're going to try to earn the spread. That's how insurance companies make money, right? They take your money, they give you 5, they make 6, they make a 1% margin on that. What do you think about individuals rolling a 401k over to annuities? Again, I don't think there's inherently anything wrong with that, Manny. I think the thing we have to be careful is that the person who is benefiting the most out of that is typically the agent. So again, nothing wrong. Insurance plays a overall part of an overall portfolio. I agree. I would have an issue if that full 500K or $1 million goes into a full annuity. I would have a little bit of an issue with that. Would you recommend instead of a W-2, pay through a C Corp to implement proper losses to offset income? Greg, doesn't work. It's a left pocket, right pocket transaction.